I mean, obviously things can go further south, but we do believe that when we're looking at some of the more technical indicators that, well, we were very much in an overbought condition with some of the largest tech companies, that this pullback, what we're really watching is whether or not we can hold that 50-day moving average, because that 50-day moving average is approximately 10%. That would indicate a type of correction. So we're looking for whether or not there's going to be some technical support. So to the extent that this correction has been triggered by whether you want to attribute it to retail flows or even to some, like CTAs or more institutional, trend following strategies, that we're looking for that overextension and then some sort of reversal. Maybe we get to a point with the 50-day moving average and the 10% correction that we would find some decent support. So that's really what we're on watch for. But longer term, we're actually looking at more rotating out of tech and have been looking more at value, small cap, and more of the cyclical, what we call the reopening plays for the economy.
Sandeep, the market, or NASDAQ, is down about 9% or maybe even a little more from where it was at its peak last week. How much farther do you think it might grind lower, if you think it might?
Volatility is elevated, so 5 or 10% downside from here is not inconceivable. That may take the NASDAQ to close to a bear market on its own. It will spare the S&P 500 that outcome that may escape with just a correction. And at a more macro level, beyond the specifics that Brian spoke about, look, while there is a lot to worry about, and it is in the form of waning fiscal stimulus, high unemployment, rising layoffs, job losses becoming more permanent, election uncertainty, against that long list, there is a slew of positive developments. Medical advances have been rapid. We may yet have a vaccine next month. We have treatments that mitigate the risk of death. Liquidity is ample. We know that works on a lagged basis. Businesses are reopening. Economies and labor markets are gradually healing. What else can I say? The housing market is on a tear. Manufacturing is recovering because supply chains are getting restored. Inventories are getting rebuilt. Earnings grew, surprised to the upside, by 23%. And third quarter GDP is projected to be 30%. So it's hard to see a recession or a prolonged bear market against that backdrop.